Welcome back to XRP Intel Authority, the channel that brings you breaking crypto news the moment it happens. And today's story is exactly why we titled this one, The Truth About XRP Finally Came Out. Because what unfolded over the last few hours is bigger than most people realize. Forget what we said about Friday. Forget the idea of waiting until the 19th. That timeline is already in the past, because just a couple of hours ago, former President Donald J. Trump, on behalf of the United States, and representatives from Iran officially signed the Memorandum of Understanding. In plain English, that means the ceasefire is real, the war talk is over, and for the next 60 days there should be no further attacks between the two sides. We were live streaming when this news broke, and honestly, it was one of the more intense sessions we have run in a while, with 2 separate live shows happening in a single day. If you caught either of those, you already know how fast things were moving, but for everyone who missed it, we are breaking it all down right here in full detail. Now here's the question everybody wants answered. Did XRP go through the roof the second this news dropped? You would think so, right? A major geopolitical conflict cooling off should send risk assets flying. But that is not exactly what happened, and this is where things get interesting. Instead of an immediate explosion higher, XRP actually dipped a little bit in the immediate aftermath. That is the kind of reaction that confuses a lot of traders watching the charts in real time, but if you have been around these markets long enough, you start to understand that the first knee-jerk reaction to big news is rarely the full story. Let us walk through exactly what happened, because there is a lot more context here that explains why the price action looked the way it did, including another massive event that hit the markets at almost the exact same time, which most people are completely overlooking right now. That other event was the Federal Reserve's FOMC decision, and it landed on the same day as this Iran news, which created a perfect storm of conflicting signals for traders to digest all at once. As soon as the ceasefire headlines hit, XRP's price dropped down to around $1.17 before starting to climb back up shortly after. The official wording coming out was that rather than signing the agreement in person on Friday as originally planned, the United States and Iran moved things up and signed the memorandum electronically instead, putting it into effect immediately. Iran's side of the statement confirmed it would begin receiving payments for providing services to ships crossing the Strait of Hormuz, which is a massive logistical and economic detail buried inside all of this. At the end of the day, the bottom line for most traders watching crypto charts was simple. Just get it signed, stop the attacks, and let the markets figure out the rest. What made this moment even stranger was watching the broader market react in the complete opposite direction of what common sense would suggest. With peace headlines flooding in, you would expect stocks and crypto to rally hard, but instead the market kept dumping. That is honestly one of the wildest parts of trading financial markets, because logic does not always win in the short term. Sentiment, positioning, and timing often matter more than the actual news itself. A breaking update came through showing the Dow down about 800 points within just a couple of hours of the Fed's decision being released, and the S&P 500 had erased somewhere around $1.2 trillion in market capitalization in under 2 hours. That is an enormous amount of value wiped out in an incredibly short window, and it tells you just how sensitive markets are right now to every single word coming out of the Federal Reserve. Speaking of the Fed, the big decision on the table was whether to cut or hike interest rates, and the announcement was a pause, meaning no cut and no hike at all. That kind of neutral stance often leaves traders frustrated because it does not give a clear directional signal to trade off of. Looking ahead to the next FOMC meeting, there is a real possibility of a rate cut, but nothing is guaranteed, and you could feel a bit of tension in the comment sections and live chat as people debated back and forth about what comes next. Some viewers were getting a little heated about it, and honestly, that kind of passionate debate is exactly what makes this community fun to be part of, because everyone has skin in the game and everyone wants to be right about where this market goes from here. Adding another layer to this story, Binance founder CZ made comments around this same period suggesting that countries around the world need to start tokenizing stocks and issuing their own crypto-backed stablecoins in order to open up access to buyers globally. That is a pretty significant statement coming from someone with that level of influence in the crypto space, and it lines up perfectly with the broader theme we keep coming back to on this channel, which is that traditional finance and crypto infrastructure are merging together faster than most people expected. Whether it is tokenized real-world assets, stablecoins backed by national currencies, or cross-border settlement using digital assets, the direction of travel is becoming impossible to ignore. and XRP sits right in the middle of that bigger story given its role in cross-border liquidity and settlement. Now, switching gears to the trading side of things, there were some solid promotions and tools worth mentioning for anyone actively trading through this volatility. There was a giveaway running with 30,000 XRP up for grabs through one of the trading platforms, plus some helpful trading tools available through a couple of our partner platforms that focus on giving traders an edge when markets are moving this fast. For anyone holding steady through the chop rather than actively trading, earning yield while you wait has been a smart approach for a lot of people, especially through regulated and properly disclosed platforms where you know exactly what you are getting into. These kinds of tools matter a lot more during periods like this, when headlines are flying and prices are swinging in both directions within the same hour. Getting back to the actual price action and what it means going forward, the honest take here is that XRP is still nowhere close to where it should be valued given everything happening around it. Remember, the bulk of the recent pump already happened a couple of days earlier on the 15th, so by the time the ceasefire news landed on the 17th, a lot of that move had already played out in advance, which is part of why we did not see a fresh explosive breakout on the actual signing day. That does not mean the story is over. In fact, current levels around $1.29 are likely far from where this asset ends up finishing its run. Pulling up the longer-term chart gives a much clearer picture of the bigger trend that is actually unfolding underneath all this short-term noise. Looking back to where things stood at the very beginning of 2026, XRP was trading up around the $2.40 range, which is a useful reminder of just how much room there still is on the upside from where things sit today. That kind of move represents a genuinely strong opportunity for anyone positioned in crypto, especially when you factor in the option to use moderate leverage through certain trading platforms, which can help manage risk while still capturing meaningful upside without getting wiped out by normal volatility. To be clear, none of this is financial advice. It is simply an honest breakdown of how some traders are approaching this market, riding the wave patiently and building positions gradually rather than chasing every single green candle that shows up on the screen. Bitcoin tells a similar story when you zoom out. Sitting around the $64,000 to $67,000 range right now, Bitcoin started 2026 at roughly $98,000, which means both Bitcoin and XRP currently sit well below where they were trading just a handful of months ago. Whether someone prefers the relative stability of Bitcoin or the higher potential returns that come with an altcoin like XRP really comes down to personal risk tolerance and strategy. What matters most right now is recognizing the broader direction these assets appear to be heading as 2026 continues to unfold, and understanding that short-term dips, like the one we just saw following the Iran news, do not necessarily reflect the bigger picture playing out over the coming months. Stepping back into the geopolitical side of this story, the ceasefire between Iran and the United States represents something the markets genuinely needed to see happen. According to details circulating about the agreement, there are reportedly 14 specific points built into the memorandum, covering things like Iran agreeing to complete denuclearization steps, while the United States agrees to step back from actions like blocking the Strait of Hormuz. Iran's side of this deal appears to be financially favorable for them as well, with reports indicating previously frozen funds being released, oil sales resuming, and various other economic tools becoming available again. In simple terms, Iran is positioned to start generating significant revenue again, and that is a detail that tends to make most parties involved in these kinds of negotiations considerably more cooperative going forward. Of course, with any major political story like this, there is always a wave of misinformation and exaggerated claims that start circulating almost immediately. One narrative going around claims Iran received $300 billion as part of this deal, which simply is not accurate, and clarifying comments addressing this directly came from Trump himself earlier in the day. Regardless of the noise, certain claims keep circulating anyway, often framed around removed sanctions, control over the strait, an intact missile program, and no destruction of the nuclear program, while critics frame the U.S. side of the deal as higher gas prices and significant spending. The full text of the memorandum has been published and is publicly available for anyone who wants to dig through the actual details themselves, rather than relying on secondhand summaries floating around social media. The White House has officially confirmed that Trump signed the Memorandum of Understanding with Iran, which removes any lingering doubt about whether this agreement is actually real and in effect. Reports also indicate that key officials were heavily involved in the negotiations leading up to this signing, having spent considerable time working through the details before everything was finalized. Taking a step back from all the noise, it genuinely feels like the broader picture here is one of de-escalation, with the world pulling back from a conflict that had been weighing heavily on global markets and energy prices for weeks. That kind of relief tends to ripple through financial markets in ways that take time to fully play out, rather than showing up as an instant spike the moment headlines break. Looking ahead, there is real optimism building around what July could bring in terms of clarity for both traditional markets and crypto. If this ceasefire holds for the full 60-day window as outlined, expect to see markets gradually settle into a healthier rhythm, potentially bringing relief on gas prices and giving both stocks and crypto room to breathe and recover from the volatility we have seen over the past few days. We want to hear from you on this one, so drop a comment down below and let us know what you think is coming next for both the geopolitical situation and the crypto markets heading into the back half of this year. Make sure you are subscribed to XRP Intel Authority so you catch every update as this story continues to develop, and we will see you in the next one. Peace.